So you want to get a handle on investing in Pakistan, specifically for 2025. We've got a ton of reports and analysis here, including the Pakistan Investment Strategy 2025 from Peral Securities. Plus, some market data and economic indicators will unpack what to expect and the why behind it all to help you make some smart decisions.
Great. Let's dive right in.
What's the big picture here?
Well, the Pakistan Stock Exchange, it had a phenomenal year in 2024, actually. It was the second best performing market globally, just behind Argentina, with a 76% return.
76%? That's incredible. I'm guessing that kind of performance is not sustainable, right?
Right. Peral Securities is forecasting a more modest 24% return for 2025.
Okay.
A big part of 2024's growth was driven by macroeconomic stability.
Okay.
Thanks in part to the IMF's Extended Fund Facility Program.
Right.
And reduced political noise domestically. But the question is, can that stability last?
That's what I'm wondering. What's making them cautious about 2025?
There are a few factors. One is the global landscape. How will Pakistan navigate? The ongoing U.S.-China trade war. That's a big unknown. Another is whether the government can maintain that momentum on reforms and keep investor confidence high.
So a bit of a wait-and-see approach for 2025.
Yeah.
To give listeners a concrete number, Pearl Securities has set a target. For the KSE 100 index, Pakistan's benchmark stock market index, at 138,490 points for 2025, that represents a 24% return, plus an expected dividend yield of 8.1%, bringing the total return to around 32.47%. So still some decent potential returns on the table, but let's rewind a bit. I understand the report included a timeline of Pakistan's market performance over the past few years. What were some of the key moments that shaped this roller coaster ride?
It really is a roller coaster.
Yeah.
You see those moments of optimism and uncertainty play out, often influenced by global events. For example, back in April 2022, there was a lot of uncertainty surrounding the general election result. Then, in August 2022, you have the UAE pledging a $10 billion investment, which is a huge boost.
Talk about a swing in sentiment. What else stood out on that timeline?
Well, in December 2022, news of potential new taxes on capital gains and dividends emerged, which obviously wasn't great news for investors. Then, in April 2023, the State Bank of Pakistan, or SBP, cut the policy rate to 13%, a sign of growing confidence, perhaps.
Possibly.
But then you have external factors coming into play, like Donald Trump winning the U.S. election in January 2024. These global events, they can have ripple effects on Pakistan's market.
Right.
What does this timeline tell you about the nature of investing in Pakistan?
It seems like you need to have a strong stomach and a long-term perspective.
But good.
It also highlights how interconnected Pakistan's market is with global events. You can't analyze it in isolation.
Exactly.
Now let's shift gears and talk about the players in this market. Who's driving the investment activity in Pakistan?
In 2024, we saw a significant rise in individual investors. They actually accounted for the majority of daily turnover in the market.
The individual investor is becoming a more powerful force.
Absolutely.
But what about those larger institutions? Are mutual funds and insurance companies fully on board with this Pakistan growth story?
They're definitely players, especially in sectors like energy and production, or E&P, cement, and fertilizer. However, there was a development that spooked some foreign investors. FTSE Russell, they downgraded Pakistan's market status from emerging to frontier. This led to foreign investors becoming net sellers.
Interesting. Is that a red flag for potential investors, or could it be an opportunity to buy low?
It really depends on your risk tolerance and your investment horizon, but it's certainly something to consider when evaluating the market.
All right. So we've got this mix of individual investors stepping up, institutions playing it somewhat cautiously, and foreign investors reacting to global assessments. But you're smart. You know diversification is key. What's the outlook beyond the stock market? What about other asset classes?
Well, gold had a great year in 2024, returning 24%. It's a classic safe haven asset, especially during times of uncertainty.
Makes sense. What about the U.S. dollar?
Surprisingly, the U.S. dollar actually declined by 1% in Pakistan's interbank market in 2024.
It's a bit unusual, given its typical strength.
Yeah.
So, potential currency risks to consider. What about fixed income?
With interest rates rising globally, government bonds and savings certificates are becoming more attractive. The 3-year special savings certificate, for instance, yielded 17%. Not bad for a relatively low-risk option.
Okay, so a mix of opportunities across different asset classes. But here's where things get a bit puzzling. The report highlights this trend of mutual funds in Pakistan experiencing significant growth. Yet, their equity allocation has actually decreased. It seems counterintuitive.
It is a bit of a head-scratcher. Their assets under management
Yeah.
have been soaring, but that growth has been mainly driven by income funds and money market funds, not equities.
So they're sitting on the sidelines of the equity party, even though the market is performing well. Why?
That's the million-dollar question. Is it pessimism about the long-term prospects of the Pakistan stock market? Or could it be a huge opportunity with that capital?
Starts flowing back into equities. You're making me think of 2017, when equity allocation increased, and we saw a massive liquidity-driven rally.
Certainly a possibility to consider.
Now, we can't talk about Pakistan's economy without addressing the elephant in the room, the IMF. Their extended fund facility program has played a significant role.
Right. It's been a big focus.
But beyond the financial assistance, what are these IMF reforms really about, and what do they mean for someone looking to invest in Pakistan?
The IMF reforms, they're about more than just a quick fix. They're designed to address the root causes of Pakistan's economic woes, laying the groundwork for sustainable growth.
Okay, so it's about long-term solutions, not Band-Aids. What are some of these key reforms that investors should be paying attention to?
There are a few key areas. For example, the reforms targeting state-owned enterprises, or SOEs, are significant. They're pushing for privatization and efficiency improvements, which could create opportunities in sectors that were previously considered off-limits or too risky.
So potentially unlocking value in overlooked corners of the market.
Exactly. Another area is the energy sector. The IMF is pushing for renegotiation of those independent power producer, or IPP, agreements, and tackling the issue of circular debt, which has been a drag on the economy for years.
What kind of impact could that have if they succeed?
Lower energy tariffs would be a major win. It would stimulate demand and make businesses more competitive. Then there are the tax reforms aimed at widening the tax base and reducing evasion. If successful, it could increase government revenue, leading to investments in infrastructure, education, healthcare, all things that drive long-term growth.
So these reforms have the potential to be pretty transformative, but as we've seen, Pakistan's political scene is never dull. How does the political landscape factor into all of this, and what's the outlook for 2025?
Peral Securities expects the current PMLN-led coalition government to complete its term, which suggests a period of relative stability.
Stability on the political front. But what could potentially disrupt that stability, and how would that impact investors?
Well, navigating the U.S.-China trade war will be tricky. Domestic political tensions could also flare up. There are always different factions vying for power. And on a positive note, there's the growing strategic importance of Pakistan for the GCC countries, the Gulf Cooperation Council.
Right, I've heard about that. How does that relationship play into the investment landscape?
The GCC countries, particularly Saudi Arabia and the UAE, are providing financial support and remittances. Strong geopolitical ties are also developing. All of this can contribute to stability and attract foreign investment.
So complex political landscape, as always. But with some potential bright spots. We've talked about domestic factors, but what about global trends? What's happening on the world stage that could impact Pakistan's economy and influence investment decisions?
Commodity prices are always a wild card. They can make or break certain sectors. And 2024 saw a mixed bag of performance across various commodities.
What were some of the standout trends that investors should be aware of?
Scrap steel, for instance, presented some opportunities due to the U.S.-China trade war and increased global infrastructure investments. Crude oil prices are always a major factor, and there's considerable uncertainty surrounding future demand from China and economic growth in developed economies.
So steel and oil, two commodities to watch closely. What about agricultural commodities?
Palm oil, it's one to keep an eye on. Supply constraints and strong demand are pushing prices up. But policy changes and the potential for an El Niño weather event could disrupt the market.
Right. El Niño always seems to throw a wrench in the works. It's not just about tracking commodity prices in isolation, is it?
Exactly. The key is to understand how these global trends translate into opportunities and risks. Within Pakistan's specific sectors, for example, if you're interested in cement, you need to be watching coal prices closely. Coal is a major input cost for cement production.
So it's all about connecting the dots and seeing how those global forces ripple through Pakistan's economy. Okay, last piece of the puzzle. What's the overall macroeconomic outlook for Pakistan in 2025, and how could it affect investment decisions?
Let's look at some key indicators. Inflation is expected to stabilize around 7–8%, which is good news because it gives the SBP some room to potentially ease monetary policy.
So, maybe some interest rate cuts on the horizon?
It's likely, but they'll probably be cautious. Lower interest rates could be good for borrowers, but might impact returns on fixed income investments. Then there's the issue of debt.
Yeah.
Pakistan's public debt to GDP ratio improved in 2024, but sustainability remains a concern. It's something to monitor closely.
What about foreign exchange reserves? That's always a crucial indicator for emerging markets.
It's correct. An increase in reserves, which is vital for import-dependent sectors. Healthy foreign exchange reserves act as a buffer against external shocks and instill confidence in investors.
All right. We've covered a lot of ground here. What's the main takeaway for investors who are considering Pakistan in 2025?
It's a complex landscape, as always.
Yeah.
But with the right information and a solid understanding of the risks and opportunities, there's definitely potential for growth and returns. We've only scratched the surface here. And part 2, we'll dive deeper into those sector-specific opportunities and risks outlined in the Peral Securities report.
Sounds good. I'm ready to explore those sectors in more detail. All right, let's get into those sector-specific recommendations you mentioned. Peral Securities has some strong opinions about where the opportunities lie in 2025.
They do. Their recommendations. They break down into 3 categories: overweight, market weight, and underweight. Overweight means they're particularly bullish on a sector's prospects. Market weight suggests a more neutral outlook, and underweight implies caution.
Makes sense. So which sectors are they most excited about?
They've assigned an overweight rating to banks, energy and production, EMP, fertilizer, and cement.
Okay, so those are the hot sectors. What about market weight?
They see power, oil marketing companies, OMCs, autos, and engineering as having a more neutral outlook for 2025.
And are there any underweight sectors?
None specifically mentioned in the report.
Okay, let's start with banks. What's driving their optimism in that sector?
They believe there's growth potential, but it comes with challenges. They highlight the impact of monetary easing and evolving deposit dynamics, which means banks need to be strategic about managing their net interest margins, or NIMs.
NIMs. Refresh my memory on what those are.
It's basically the difference between the interest banks earn on loans and the interest they pay on deposits.
Okay.
If that gap shrinks, their profits take a hit.
Got it. So they need to make sure that gap stays healthy.
Exactly. The good news is that Peral Securities believes that banks in Pakistan have robust capital buffers, putting them in a good position to weather potential storms and continue paying those dividends.
Dividends are always a nice bonus. Okay. Let's move on to the energy and production sector. What's their outlook there?
They're quite bullish on EMP, largely due to the ongoing energy sector reforms and gas price adjustments. Companies like Oil and Gas Development Company Limited, or OGDC, and Pakistan Petroleum Limited, PPL, are seeing improved liquidity, allowing them to invest in growth and potentially increase profitability.
Interesting. What about those rumors surrounding the Reko Beek project and potential divestment?
That's a significant development to watch. If OGDC and PPL decide to sell a portion of their stakes to Saudi investors, it could unlock a substantial amount of capital for the sector, potentially fueling further growth.
So there's a lot of potential upside for EMP. What about fertilizer? That's always been a key sector in Pakistan.
Absolutely. Peral Securities sees a favorable outlook for fertilizer due to strong demand, government support, and improving operational efficiencies. They also mentioned the impact of population growth and agricultural investments under the Green Pakistan Initiative, all of which point towards continued growth in the sector.
Sounds promising. But what about those gas price fluctuations? That often impact fertilizer production costs and those climate risks. That can affect agriculture and fertilizer demand.
Those are valid concerns. Gas prices can be volatile, and events like droughts or floods can definitely disrupt agricultural activities and impact the demand for fertilizers. There are factors investors need to keep in mind.
So fertilizer is a sector with good potential, but not without its risks. What about cement?
Peral Securities believes cement is on a roll. The sector saw strong growth in 2024, driven by both domestic and export demand. They expect this momentum to continue in 2025, supported by easing inflation and a more favorable monetary policy environment.
So are they saying cement is a sure bet?
Not exactly. They acknowledge that potential policy changes could impact the sector and that geopolitical instability always poses a risk in Pakistan. However, their overall outlook for cement is quite positive.
All right, so that covers the 4 overweight sectors: banks, EMP, fertilizer, and cement. What about those with a market weight rating? Let's start with power.
Peral Securities acknowledges the government's push for reforms In the power sector, they're trying to tackle the circular debt issue, renegotiate those troublesome IPP agreements, and ultimately create a more competitive electricity market.
Those are some ambitious goals. What's their takeaway for investors, given all these moving parts?
They believe the power sector is heading in the right direction, but it will take time for these reforms to have a significant impact. It's more of a long-term play with potential for improved efficiency and increased demand down the road.
So patience is key with power. What about OMCs?
OMCs took a hit in 2024, but Peral Securities believes they're poised for a recovery, lower global oil prices, a crackdown on fuel smuggling, and potential margin adjustments should boost profitability and make them more competitive.
So a bit of a rebound story for OMCs?
Exactly. They're starting from a lower base, which could translate into greater potential for gains if their projections are correct.
Now let's talk about autos. What's the story there?
The auto assembling sector is recovering from those tough macroeconomic conditions we saw in 2023. Car sales are rising, helped by monetary easing, a more stable currency, and the government's push for increased localization. Plus, the new EV policy framework is attracting investment and driving innovation.
So is Pakistan's auto industry going electric?
It's a trend to watch. While it'll take time for EVs to become mainstream due to infrastructure limitations and consumer adoption still being in early stages, the potential is definitely there.
And finally, what about engineering?
The engineering sector faced some challenges in 2024, but Peral Securities expects a rebound. They believe that as economic activity picks up, so will the demand for engineering products. Plus, lower interest rates should ease financing burdens and improve profitability.
All right, so we've got a good overview of the different sectors. Now let's get down to the specifics. Which companies are Peral Securities actually recommending as buy opportunities based on their analysis?
They provide a list of buy recommendations from their Pearl Universe valuation sheet, broken down by sector. For banks, they like United Bank Limited, UBL, and Habib Bank Limited, HBL.
Those are two of the biggest players. In Pakistan's banking sector, what makes them stand out, despite the challenges facing the sector as a whole?
UBL has impressed with its deposit growth, its management of deposit costs, and its strategic investments. They also seem to be adept at navigating the regulatory landscape and optimizing their balance sheet to minimize their tax burden.
Smart moves. What about HBL?
HBL is more of a turnaround story. They've been working to improve their credit origination process and boost their fee income to offset those shrinking net interest margins. They're also focused on operational efficiency and reducing their cost-to-income ratio.
So two different approaches, but both aiming for profitability and growth. Now, what about those E&P giants, OGDC and PPO we talked about, their potential gains from Reko Deck? But what else is driving their appeal?
OGDC have been making significant oil and gas discoveries. Adding to their reserves, they're investing in new exploration projects and boosting production capacity. PPL is also active, investing in offshore drilling operations, exploring new reserves, and working to increase the efficiency of their existing production facilities.
So both companies are actively pursuing growth. And with those potential dividends from the Reko Deck divestment, it could be quite lucrative for investors.
Absolutely.
Let's move on to fertilizer. What are FFC and eFert, the companies they recommend in this sector, doing to mitigate those gas price fluctuations and climate risks?
FFC has been securing long-term gas supply agreements at favorable prices. They've also invested in energy efficiency measures, lessen their dependence on gas, and protect themselves from price volatility.
So they're taking a proactive approach to managing those risks. What about eFert?
eFert is focusing on diversifying its product portfolio, moving beyond traditional fertilizers, and developing higher-margin specialty fertilizers. They're also implementing precision agriculture techniques to optimize fertilizer use and minimize waste, which is good for both the environment and their bottom line.
Innovation and efficiency seem to be their key words. Now on to cement. What's behind the strong performance of LUCK and DGKC, the two companies they're recommending in this sector?
LUCK has made significant investments in renewable energy to power their cement plants. This reduces their environmental footprint and makes them less vulnerable to energy price swings. They've also expanded production capacity and diversified into other areas like mobile phone assembly and automobile manufacturing.
So they're not just a cement company anymore.
Right. They've evolved into a conglomerate with a wider range of business interests DGKC has focused on. Improving energy efficiency and reducing reliance on imported coal. They're also expanding export markets and developing higher value products.
To boost their margin. Okay, so both companies are taking steps to strengthen their positions and capitalize on the demand for cement. Let's shift to those other sectors now. Starting with power. What's the story with HUBC, their top pick?
HUBC's strength lies in its diverse portfolio of power generation assets. They've got exposure to coal, oil, gas, and renewables, giving them a buffer against fuel price fluctuations and regulatory changes. They're also investing in new technologies, including electric vehicles, which positions them for future growth.
So they're diversifying their bets. And looking ahead to the future, what about PSO, their pick in the OMC sector?
PSO is working on improving its liquidity, reducing debt, and streamlining operations. They're also expanding their retail network and focusing on customer service.
Efficiency and customer satisfaction are key for them. What about INDU, their recommendation in the auto sector? How are they approaching the growing demand for cars and the shift towards EVs?
INDU has been ramping up production capacity, introducing new models, and increasing their localization rate to reduce dependence on imported components. They're also investing in EV technology and partnering to build out the charging infrastructure needed for wider EV adoption.
So they're embracing the EV trend. Finally, let's talk about ISL and PayIll, their picks in the engineering sector. What's driving their growth?
ISL is expanding its product portfolio, moving beyond traditional steel products and developing more specialized, higher value offerings. They're also investing in new technologies to improve efficiency and reduce environmental impact. PayIll has done a good job turning their business around, reducing debt, improving profitability, and growing their market share. They're benefiting from increased demand for appliances and power equipment, fueled by the expanding middle class and government infrastructure investments.
Okay, that was a lot of information on specific companies. But it's helpful to have these concrete examples.
Definitely. But remember, this is just one perspective, and investing always involves risks. Past performance isn't a guarantee of future results. Always do your own research, consult with a financial advisor, and make informed decisions.
Sound advice. What's next on our agenda? So we've covered the stock market and those sector-specific opportunities, but like you mentioned earlier, diversification is key. So let's explore those other asset classes beyond stocks.
You're thinking gold, the U.S. dollar, fixed income.
Exactly.
Each one brings something different to the table.
Let's start with gold. It's that classic safe haven asset, right? People flock to it when things get uncertain, whether it's economy or geopolitics.
That's right.
And 2024 was a good year for gold, with a 24% return. The question is, can that momentum continue in 2025? What are the factors that could influence gold prices going forward?
A lot depends on global sentiment. If we see, a major economic downturn or a geopolitical crisis, gold prices, they'll likely surge.
Fear is definitely a driver for gold. But what if things are relatively stable?
If the global economy holds steady and geopolitical tensions ease, gold, it might lose some of its shine. Investors, they might shift to riskier assets that offer higher potential returns.
So gold is a hedge against uncertainty, but might not be the top performer in a calm market. What about the U.S. dollar? How does that play into the picture for investors in Pakistan?
The U.S. dollar, it usually strengthens when the U.S. economy is doing well or when there's global uncertainty. It's seen as a safe haven currency.
Exact.
But here's something interesting. In 2024, the U.S. dollar actually weakened against the Pakistani rupee.
That's unexpected.
It's a bit of a surprise. It could mean that investors are feeling more optimistic about Pakistan's economic outlook.
Or it could just be a temporary fluctuation.
Is this U.S. dollar weakness a trend that's likely to continue?
It's hard to say for sure. The relative strength of both the U.S. and Pakistani economies will play a role. If Pakistan continues to exceed expectations, we might see further weakening of the U.S. dollar. So that's something to keep an eye on. Now let's talk about fixed income options, like bonds and savings certificates. These are generally considered safer and steadier, but with lower returns than stocks. They're a good way to balance out your portfolio and manage your risk. What's the outlook for fixed income in Pakistan in 2025?
With interest rates rising globally, government bonds and savings certificates are becoming more appealing. They're offering higher yields than a year ago, which is good news for income-seeking investors.
Fixed income could be a good option, particularly for those who are more risk-averse. Now, I'm curious about something. The report mentioned alpha stocks. What are those exactly?
These are companies the Peral Securities believes have the potential to outperform the market. They have strong fundamentals, solid growth prospects, and maybe a unique edge that sets them apart.
Give me some examples.
One of their top picks is Fauji Foods Limited, FFL. They've been doing well lately, diversifying their products, improving margins, and expanding their market share. They also have a strong management team and a healthy balance sheet.
Sounds promising.
Another one they like is PAC, Electron Ltd, PA-IL. They're a major player in the appliances and power sectors, and they've been working to reduce debt and improve profitability.
And is there a third alpha stock they highlighted?
Yes, Interloop Limited, ILP. They're a leading textile manufacturer with a strong global presence. They've been investing in expansion, implementing sustainable practices, and building strong partnerships.
So those are some specific companies to watch. But let's zoom out for a moment and consider the political landscape. It's always a factor in Pakistan. Political stability is essential for investor confidence and economic growth. What's the political outlook?
For 2025.
It's a bit complicated. The PMLN-led coalition government is expected to finish its term, which is a positive sign. However, there are still challenges ahead. They'll need to navigate the U.S.-China trade war, manage domestic political tensions, and keep those IMF reforms on track.
It's a lot to handle. What about those growing ties with the GCC countries? Is that a positive development? It definitely is. The financial support and remittances from the GCC are vital for Pakistan's economy. But they can be complex, too. There are always political considerations involved.
So the political scene is, as always, a bit unpredictable. Let's bring it back to those global trends we discussed earlier, especially commodity prices, which can have a big impact. What are the key takeaways for investors in Pakistan?
The key is to see how those global trends translate to specific opportunities and risks within Pakistan, for instance. If you're looking at cement, you need to pay attention to coal prices. Because of the production cost. Or if you're considering the oil marketing sector, keep an eye on crude oil prices. They'll influence profitability and fuel price adjustments.
So it's all about understanding the connections between global forces and Pakistan's specific sectors of investment in Pakistan is not for the faint of heart. There are risks involved, but there is also great potential for rewards. So to wrap up our deep dive, investing in Pakistan in 2025, it's complex, but could be very rewarding. There's a lot to consider, from economic indicators and IMF reforms to ever-specific sectors, political dynamics, and global trends like commodity prices. But with the right knowledge and a well-thought-out strategy, you can navigate this exciting investment landscape and potentially achieve your financial goals. Remember, knowledge is power. The more you know, the better decisions you can make. Keep learning, stay curious, and never stop exploring. Good luck out there.